Welcome back to Fast Market here on the Schwab Network. It's time for cash tags. For that, let's bring in our next guest. That's going to be Andy Swan, co-founder at LikeFolio. Welcome back to the show, Andy.
Thank you.
All right, so we're talking CarMax. It's getting its lunch eaten by some of the competitors, especially Carvana. It's been a choppy trade. What are you guys thinking here in CarMax? What's your data say?
Our data says that CarMax is losing in a very big way. You know, he thought Carvana 2 years ago was basically declared dead by Wall Street, but has come absolutely roaring back like a phoenix from the ashes and is, like you said, eating CarMax's lunch in every way imaginable, every metric that we could possibly track. Carvana is beating CarMax. I think the most telling, in terms of the consumer behavior is simply the web visits. And this is where people are expressing their interest to shop for used cars with the two competitors. And you can see year over year, the change in visits for Carvana is plus 21%, which is a huge number off of such a high baseline, and CarMax at negative 1%. So you can just absolutely see the market share continuing to move from CarMax to Carvana. And then what are they doing with this traffic? What are these companies doing with this traffic? And you look at the used vehicle sales, price and profit per unit. Carvana coming in at $7,400 per used car that they sell is profit, whereas CarMax is $2,200 in its best case scenario on the retail side. And so again, Carvana outperforming CarMax, making more money per unit and delivering a better experience that customers like and that customers are flocking to at the same time. That's pretty unheard of to see both of those things happening at once, but it's something we've consistently seen from these two companies over the last 12 to 18 months. And so I don't think there's any light at the end of the tunnel for CarMax for us to report.
Andy, regardless of what name we're talking about, CarMax or Carvana, what really has jumped out to me looking over the macroeconomic data in the last 2 months is used car prices. Up 2.7% 2 months ago, up 2% last month. That's one of the biggest metrics in CPI over the last 2 months has been used cars and trucks. Now, part of the CarMax story is the fact that higher profits per unit, like you mentioned, those are crazy numbers that you mentioned for Carvana. How can you make $7,000 per car? That is a lot of money on a used car. On a used car. So could it be that both of these companies are doing well and Carvana is just doing better, or is this a pairs trade? Buy Carvana, sell CarMax.
Yeah, I think that the discrepancy between the two is so large that it lends itself more to the pair trade idea. When you see web visits plus 21% in one direction and minus 1% for the other company, when you see year over year growth, so it's not just the profit per unit, it's the year over year growth between the two. Carvana adding 24% profit per unit, whereas CarMax is flat. So Carvana's just outperforming CarMax. And I think that's the story for CarMax going into earnings is what are you doing, to stop the bludgeoning that you're taking from this competitor? And the other part of CarMax's problem is that unlike Carvana, CarMax internalizes most of its used car loan risk, and so they're consistently having to add loss provisions into their loan profile to their customers that is growing by millions of dollars every quarter because their customers are having trouble keeping up with the payments, whereas Carvana has shifted most of that to third-party investors in the debt market. So I think it's possible both are doing okay or got a tailwind, but it's absolutely clear to us that Carvana is taking far more advantage of that tailwind than CarMax is, and is likely putting CarMax in a very difficult competitive position.
Andy, I'll break it down for you. You know, buying a car is a long, arduous process, and I think is that one of the reasons that maybe your data is so reflective that everybody's going to Carvana because of the fact that, hey, it's easier. You know, you're not in a CarMax location. I know they've got omni-channel also, but it's just easier going through the process where you're not sitting there at the dealership for, 2-3 hours just to purchase a car, where Carvana makes it easier and people are willing to pay a little bit more, and maybe that's why their margins are wider for Carvana. Is that maybe, some of the data that you're seeing on this?
Yeah. I think that's the big takeaway for me, is that the Carvana experience, the online experience, is worth a lot to the sellers and the buyers. If you take a look at the delta between, the gross profit per unit between the two companies, it's about $5,000 to Carvana's advantage, which tells me that probably a car seller says, all right, it might be worth $2,000 or $3,000 to just get this done really quick, all online. They're going to come get it. I don't need to drive it in there and haggle with somebody. And the same thing's probably happening on the buyer side. This is worth $2,000 or $3,000 so that I don't have to deal with the salesman who has to go talk to his manager. I just want to get this done. And Carvana provides that experience very seamlessly. And that's why I think, they'll continue to win until CarMax can figure out how to replicate the magic that Carvana has created for online used car shopping and selling.
Yep. I thought maybe that was it, because the last time I purchased a car, it's like, I'm almost falling asleep because it takes so long.
It's terrible.
Terrible experience. All right, Andy, real quick before I let you go, you got an earnings score on this one, because option market's pricing in about a plus or minus $7 move in the shares.
Yeah, we're officially neutral on CarMax going into this, but the more I talk about it, the more I could see myself putting on a bearish position. I can talk myself into a bearish trade here.
Opinion here, Andy.
It's easy to take it that way. All right.
Yeah.
Great stuff.
Neutral.
Great data as always, Andy. Appreciate it.
What does he sound like when he's bearish, if that's neutral?
All right. That's Andy Swan, co-founder at LikeFolio, breaking it down for us. Okay, Kev, you got an example?